Okay, this is Kerry Artak with Artak Advisory, and this is an AgriTalk PM video supplement that I do weekly for the show, the spot that I'm on in the afternoon. This supplements what I'm saying, shows you what I'm looking at. This is about 10 minutes long, and that's for Monday, April 12th. I suppose I should mention that. It's for Monday, April 12th, and in this video, I cover three markets: June lean hogs, May corn, and May wheat. Before I jump into the charts, I just want to emphasize the fact that I do offer a 2-week no questions asked trial. I would love it if you took advantage of that. You don't get put on a sales list, and there aren't people calling you constantly to sign up for anything. I essentially send you an email. You start receiving everything that I produce, all the newsletters, the audio portions, even the videos that I produce for 2 full weeks. No questions asked. And then I follow up with a phone call, and you're either interested really or you're not. So please fill out the free trial form on my website, first name, last name, email address, and ideally a phone number. And we can. And also, if you've had a free trial before but you haven't had one in at least 6 months, I allow a new 2-week free trial every 6 months. Okay. So anyway, let's jump into May corn. And this is just a reminder of the long-term buy signal that I've been mentioning on the show since December, when we closed above this 465 and a quarter 5-6 year channel top. This is what I'm calling the new floor of support for the broader corn market, 465 and a quarter, and above which I am anticipating 645 and 3/4. The question is, for me, isn't so much if, but when. Will it be over the next few months, or will it take into later year to achieve? And this 579 even 50% retracement level will have some to say about that. We've tested it several times over the last month. The first time was when March was front and center, and we got to 574 and a quarter. That was in early February. And then we've tested it several times over the last couple of weeks. We have not closed above it on a weekly basis yet. We are trading above it in aftermarket trade Sunday evening right now at 581 and 3/4. I do like 1% violation thresholds on all of my long-term signals. And so I would need to see a settlement above 579 even by at least a 1% margin to give buy signal clarity into May-June trade. And for me, really, what I like is that 1% violation is not far off this 585 and 3/4 sort of a horizontal channel structure. It's actually contained highs for last week. And it's at 585 and 3/4. And if May corn settles above 585 and 3/4 at the end of this week, any daily settlement, actually, FYI, will do it. But you do obviously want to see the market settle the week itself out on Friday afternoon at 585 and 3/4 or higher. And then I think this ultimate 645 and 3/4 objective to be realized within 2 to 3 months at the very most. We could actually reach this by early June perhaps, and this speed line can absorb annual buying pressures, and from here the market can fall back into later year. Now let's talk downside. I just mentioned 579 is sort of your de facto ceiling through spring, and unless we can settle above it, this market can fall back to meaningful support. Initial is 539 even. Potential is 503 and a quarter over the next month or two. Now, I don't have an indication of 503 and a quarter. I would if we settled below 539 even. Then we have a 2 to 3 week target at 503 and a quarter, which can absorb broader corn selling into summer trade. So you could say, our dynamic into summer is a 503 and a quarter floor and a 579 even ceiling. And if we close above 579 even in the coming week or two, then we should then reach the 645 and 3/4 target within just 2 or 3 months. I'm going to move on to, let's go to lean hogs actually. This is June lean hogs. This is a weekly continuation chart, reflects the June contract right now. I hope you can make the colors out on your computer screen, but I've got horizontal black is a channel top. Horizontal black up here, up at the top, is also an extreme channel top. Bottom line with the 2 black lines, we settled above this 100.30 horizontal channel top about a month ago. At that point, eliciting a broader lean hog market buy signal into summer trade, the next 3 to 5 months expected to yield 134.92. So 134.92 remains a long-term target. These blue lines in between are the intermediate containment points, hesitation points along the way, on the way to 134.92. Last week we settled above 107.92, which is this old gap area from a rollover back in 2014. We settled above it. Next target 116.65, so forth and so on. I don't have any reason to play the short side in lean hogs long term, which is to say into summer autumn trade, unless we close below 100.30. And until that happens, this market, in my opinion, is likely to reach 134.92 over the next 3 to 5 months. I'm going to show you the lean hog index. This sort of supports it as well. This is the lean hog CME index. And we had a buy signal in as well. I actually produce a weekly video that comes with the lean hog subscription. So I cover both the lean hog futures and the CME index in one letter. And back in the middle of March, we settled above this horizontal formation. And that looks familiar, I'm sure, because it's not altogether different than the horizontal formation on the weekly futures chart, which are two very different markets, by the way. In any event, having settled above the 88.48 channel top, our target is 126.40 over the next 3 to 5 months. Along the way, the lean hog index can top out for a month or so in the 110.50 area. You can see this old pivotal region that contained twice. Anyway, I think that's it for lean hogs. Let's move on to the last market, and that is May wheat. Big picture May wheat. This is a chart that goes back to 2006, about 15 years. And I use speed lines a lot for trend identification. And presently, I've been telling my wheat subscribers, and when I mean presently, for the last 3, 4, 5 months, several months since the January high, we've had a rising 1/3 speed line projected off the 2016 low at 602.5 this week. We did test it a couple weeks ago. It held nicely. And as long as we continue holding above 602.5, whether it's the May contract, July contract, whatever contract is front and center will inherit these price points on this chart. 602.5 floor of support through the year, and above which the long-term outlook for the broader wheat market is constructive. Anticipating the 850s or wherever this speed line may be at that time, we could reach this by the end of the year or sooner, or it may take 2 years from now to reach, depending. Right now we're in the midst of this long-term saucer bottom that you can see right here, and these have a way of accelerating at the tail end. So we may get some price acceleration to the upside in the coming month, 2 or 3. And let me show you what those indications would be. This is a weekly continuation chart. Once again, a little blown up version of the same chart you just saw. Right now, I've got 664.25 that can contain weekly buying pressures, but if settled above, would be our upward signal. This is our upward pivot point into May trade, closing above 664.25, expecting 734.5 within probably 3 to 5 weeks. It might take a little longer than that, but 2 months at the very most. The 734.5 formation able to contain buying through summer trade. And once tested, the market could fall back to the channel bottom somewhere in the low $6 area. But if we close above 734.5 in the coming months, and I know I'm way ahead of myself here, this long-term number that I just gave you a moment ago at 853, right here, where's my pencil? It's right around 730, 734, somewhere in there. There's your channel top. You can see it doesn't take much to see that just a few months after that, we could reach 853.25. So bullish above 602.5. What happens if we settle below 602.5? And if we settle any week below 602.5, good annual high. I'm not expecting to see this price point, 693 even, anytime again before the year is out. I would then have 541.25 as a 3 to 5 week target. And the next 3 to 5 months, 482.75. In other words, if we did close below 602.5 at the end of this week, 482.75 becomes a 3 to 5 month downside objective, which takes us into early to later part of summer, where we could bottom out through the balance of the year. And that, I believe, is all that needs to be said for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.